Hello, and welcome to our public webinar. We're going to wait 1 minute while we have participants joining. Hello and welcome. We are going to start in less than a minute, just while we have people signing on and joining our public webinar. Okay, let's go ahead and begin some housekeeping. First, we just want to welcome you again to our monthly public webinar. This is being recorded. It will be on our YouTube channel after this presentation so that you can refer back to it. Next slide. Just a little bit about Community Legal Services. We are a not-for-profit law firm, and we provide legal assistance from advice to direct representation in many areas in civil practice, not just tax. We serve the low-income populations in Arizona in 5 different counties, which I'll show you in a second. And we do, on top of helping individuals, we do presentations like this. So if you are a caseworker or you're interested in having us come to your organization and talk about legal rights in any of the areas that we specialize, we would love to do that. Also, if you're an individual who is looking for legal advice, we will show you at the end how to apply for services. Bree is not going to be able to provide legal advice during this webinar, but she is going to be going over the law and legal information, and you're welcome to put any legal information questions in the Q&A, and we will get to it at the end. But if you have advice questions, she's not going to be able to do that, but we encourage you to apply for services at CLS. Again, we are free, and I'll show you how to apply at the end. Next slide. Just a little bit, we are in 5 counties, Mojave, Yavapai, La Paz, Maricopa, and Yuma. But if you are joining us from one of the other counties in Arizona today, don't worry, because we have sister organizations, Southern Arizona Legal Aid to the southeast, and DNA People Services to the northeast. And I'll show you, there is a number where you can apply to all 3 of the programs, and they'll direct you to which one you need to go to at the end. All right, next slide. And I think I'm giving it to Bree at this point. I want to welcome Bree Stampergen for doing this presenting this information today for us. Bree is the director of our low-income tax clinic at Community Legal Services. She is an expert in federal tax. We are grateful to have her today speaking to us on this information about what we do when we file late.
Welcome, everyone. Thank you for being here. Over the next 20 minutes, we're going to cover something that affects virtually every adult that's attending, and that's federal tax filing. Specifically, we're going to look at your rights as a taxpayer, what the law actually requires of you, and what happens when things go wrong, and most importantly, what you can do to fix them. So if you're filing your own taxes, or you're helping a family member, or you're advising clients, these stakes are a high risk, more than people realize. So understanding these rules are going to be your best protection for you. So here's the agenda that we're going to go through. We're going to cover 7 main areas today: who's required to file, what your rights are as a taxpayer, your filing responsibilities, what happens if the IRS files a return for you, the civil and criminal consequences of non-compliance, which means not filing, and the statutes and limitations that govern everybody's rights. So let's start with this question: who actually is going to be required to file? So here are the filing thresholds for the IRS. Right now we're dealing with just federal tax return filing obligations. So the legal obligation to file a federal income tax return depends primarily on your gross income and your filing status. This table on this slide shows the 2025 thresholds for filing. These amounts above are mandatory. So if you're a single person, unmarried, $15,750, which you made in gross income. And gross income is a very large category. It's not just your salary, but it includes any kind of stocks that you did, anything that you received a 1099 for, or services that you've done, you're required to file. Here's a biggie. So married filing separately. A lot of taxpayers choose to do married filing separately to avoid their partner's tax consequences. But guess what? Your filing threshold is only $5. So you make $5, got to file. And here is one that always catches a lot of people. Self-employment net income, it's over a gross of over $400, always requires filing a tax return. So when in doubt, the cost of filing is almost always less than the cost of not filing, and we're going to go through that in this presentation. So here are kind of your filing responsibilities, right? April 15th is the deadline. Unless April 15th falls on a weekend, then it's going to go to that following Monday. You can extend the time to file your taxes to October 15th, but you cannot extend the time to pay your taxes. And this is where people get confused. There are two different filing requirements to come into compliance with the IRS. The first is the filing requirement. That's actually filing your federal return. That is due April 15th, and you can extend it if you need to October 15th. However, the requirement to pay does not get extended. You must pay by April 15th every year, or if you're a gig worker or a 1099 worker or an independent contractor, you have quarterly payments that you must make timely. Otherwise, we'll get into it, penalties and interest could accrue. Okay, so then you have to pay your estimated taxes. That's what I went over. You have to correct your prior returns. Now there's a statute of limitations to do that too. So you'll have to do that from 3 years of the original due date. You're going to have to report all income sources. So let's go through them. So W-2, that's what you get from your employer. 1099, that's what you get as an independent contractor. Or 1099s also have a number of other ways. If you get mortgage interest, you can use that for a deduction. You get a 1099 as an independent contractor, or you get a 1099 from your stock account, or you get a 1099 from your IRA. That's also a deduction. So some of these 1099s can be income, some of them can be expenses or deductions really. And anything that you need to put on Schedule C, that's for your profit and loss if you're an self-employed. K-1s, foreign income, we're not going to go over that. So you're going to need to maintain your records, right? So the thought is to maintain your IRS records for 3 to 7 years. If you're committing fraud, I'm not going to go into it, better hold on to that stuff longer. The burden of proof is on you as a taxpayer to prove that you are entitled to this, to take these deductions and expenses, and that your income that you say it is true. Okay. Oops, wrong one. Okay, so let's talk about a gig worker for a second. This includes rideshare, so like Ubers, Lyft, any kind of deliveries, so Uber Eats, Grubhub, any kind of freelance work that you do if you're a musician or an artist, or you provide services, consultancy. These are considered gig workers, right? So these are the type of income documents that you might receive for your gig work, right? Non-employee compensation would be the 1099 NEC. Here's another one. This is a 1099K for anything you're dealing with credit cards, right? Through PayPal. This is the threshold. If you're selling stuff online, the threshold is $20,000 or 200 transactions. Then you have to report that and you'll get a 1099K for that. Any tips and bonuses, that's got to be included as salary, even though it might not be received on your 1099. You kind of keep track of that yourself, or the person that you're working for will send it to you. 1095A, this is if you're using the Affordable Care Act. I'll get a 1095A on that. Self-employed health insurances, any kind of IRAs, HSAs, or FSAs. So what can you deduct if you're a gig worker? Because this is an important part, right? You want to be able to get the most out of the income that you make, and you're certainly putting your own money into the work that you're doing. So what should you do? You have to keep a mileage log. This is really important. People don't do this, right? It's really, really simple to do. You can download an app on your phone. Every time you start a delivery, click that app. If you want to do it by paper in a notebook, do the date, the destination, the business purpose, the mileage. The best way to do this is to record the beginning and end of your mileage on your car. You can keep a Google Map record. You can do all sorts of things, but mileage log is really important because a lot for these people that are drivers in delivery and rideshare, that's where most of their expenses are. Then you're going to need vehicle expenses, right? Keep your gas receipts, insurance, repairs, registration, depreciation. There's a lot that goes on with being a self-employed worker. Any equipment and supplies that you're putting into your business, and any platform or advertising or anything else that you're doing towards your business, you can deduct, okay? We're going to skip over the rest of it. If you're getting Social Security, you're going to have to include that as income if you're also working part-time, because there's a threshold with how much Social Security you can earn before that part becomes taxable. You want to keep your bank account records, keep your business and your individual separate. You want home office records. If you're renting a space, or if you're claiming utilities, or if there's square footage, and if you have any kind of student loans and interest. Okay, next slide. So where can you file taxes? Well, my favorite place is VITA. That's the Volunteer Income Tax Assistance Program. Hundreds of clinics open up all over the Valley during tax season to get your taxes filed for free. This threshold for being eligible is you must make $69,000 or less as a family. Some cases, in some VITA areas, it's $73,000, so check with your local VITA to do that, to qualify for getting your taxes filed for free, okay? So this applies to persons with disabilities, ESL speakers, adults over 60 plus. They go through AARP, active duty military. They cover all of your credits and your self-employment and your HSAs. They don't do complicated tax returns. So if you're complicated, you're going to have to pay a private tax preparer for that. Here's how you can see where your VITA sites are. You'll go to irs.gov/VITA. This is the site locator. So you'll put in your zip code and it'll pull it up for you. You can call. You can go to this website as well, and it's available from the end of January, opened around January 28th through April 15th. So who are we? We're not VITA, but we're LITC. So we help if you have a dispute with the IRS, if you have an audit or you received a notice, or you didn't get your refund. That's you contact me. For those, if you want to get it prepared, you go to VITA. So here's some other ways that you can file. You can file for free with IRS Free File software. If your adjusted income, gross income is $89,000 or below, you can file for free using the IRS Free File at irs.gov Free File. It's a partnership between the IRS and 8 private software companies, and the software walks you through it, kind of like a TurboTax, and it'll perform error checking, and it'll e-file your return for free, okay? You could also do fillable forms, right? So these are free file fillable forms. If your adjusted gross income is $89,000 or more, and you're comfortable with tax law and preparing your own taxes, the IRS offers electronic versions of all its paper forms. There's no income limit, but there's also no guidance. So these are for experienced filers who know what they're doing. You could also go through paid software or a tax professional, TurboTax, H&R Block. Again, my recommendations, if you qualify, if you're joining this webinar, most likely you qualify for our services, which most likely you'd be eligible for VITA. That's my recommended place to go to get your files taxed. If not, then do a paper return by mail. This is the slowest way to get your refund. It's also the slowest way to get your taxes if you're trying to update a dispute. IRS has a history of not receiving mail. So my recommendation is always to use certified mail. And that way you have proof of timely filing, okay? You can download the forms on the IRS website, okay? So you guys know, if you're looking for a refund, e-filing with direct deposit is going to be the fastest way for you to receive a refund. Typically, it's within 21 days, goes right into your bank account. Paper returns, although on the IRS website it says 6 to 8 weeks, as a practical matter, it could take longer. And again, always request a confirmation if you're filing by mail. All right, so we just went over this. Just make sure. Oh, and the other way that you can do it is you can file your tax return in person at the IRS office locally. The Phoenix office is located at 4041 North Central Avenue. It's at the corner of Central and Indian School. You get a stamped copy. There's also a taxpayer assistance center and IRS arm in Glendale and in Mesa. Okay, so what happens if you don't file? Well, you're going to face penalties and interest. You could have a loss of a refund. And if you're thinking about filing bankruptcy, there could be implications with that at all. So let's talk about money. Specifically, how quickly can the IRS add to what you owe when you don't comply? Let me get you over there. All right. So the four numbers at the top of the slide kind of, oh, I'm on the wrong slide. Hold on, let me go to. So the failure to file penalty. So here's something that taxpayers don't understand. They think they only get one penalty by not filing timely. If you owe money, you actually have two penalties that you're facing. The first one is failure to file. The second one is failure to pay. So even if your taxes, you don't have all the information, file your taxes on time by April 15th, because you're going to avoid the failure to file penalty. You still may be required to have the failure to pay penalty if you don't pay, but at least you're getting rid of one penalty altogether just by filing a tax return. Okay, so let's talk about the failure to file penalty. It's a 5% of unpaid tax for each month or partial month that the return is late. It is capped at 25%. That's a quarter of your tax bill in just 5 months. The failure to pay penalty is 0.5% per month, but it keeps you running until you actually pay the balance. After the IRS issues a notice of intent to levy, guess what? That failure to pay, the FTP penalty, bumps up to 1% per month. If both penalties apply in the same month, the failure to file rate is reduced to 4.5%. But the combined exposure is so significant and it adds up quickly. There's other penalties that we'll go over in the next slide. There's an accuracy penalty if you fail to do it to accuracy. We're not going to go through all of them because they get complicated in complicated tax law, but know that you are subject to these penalties if you do not file timely and you do not pay timely. Now remember, to avoid the failure to file penalty, if you can't get it done by April 15th, file that extension by October 15th. But if you owe taxes, you must pay them by April 15th to avoid that failure to pay penalty. So let's go over what kind of the key message of this is. The failure to file to pay penalty is 10 times larger than the failure to pay penalty. So already, again, file your return by April 15th. Go to VITA, go use one of the free file resources that I gave you, go to a paid tax preparer, but file that tax return. If you, let's give an example. If you owe $5,000 and you don't pay it for 5 months, you've now added $1,250 to your failure to file penalties alone. If you had filed on time, but you just couldn't pay, the same 5 months would cost you only $125 for failure to pay penalties. That's a $1,125 difference in your pocket that you could have saved yourself from that underlying tax step. So, what's my rule of thumb? File on time, even if you can't pay. File the return and then deal with the balance later. The IRS has payment plans, and we're going to talk about these options shortly. What they don't have is patience for non-filers, which is non-compliance. Okay? All right. So what happens if the IRS, or if you don't file a tax return, right? What happens? The IRS files what's called a substitute for return for you. Okay. And these have bankruptcy consequences. So in Arizona, you have to file your tax return in order for it to be counted as dischargeable in bankruptcy. Once a substitute for return, which is what the IRS is preparing for you because you did not file a tax return, once that is assessed, the tax debt is permanently non-dischargeable in bankruptcy courts, according to the Ninth Circuit. So just by filing your return, and you meet all the bankruptcy rules, which we're not going to get into today, you may be able to discharge that tax debt in bankruptcy court. However, if you don't file and the IRS files that substitute for return for you, you cannot discharge it in bankruptcy court in Arizona. Okay, so let's talk about the IRS collection process. What happens if you don't file? You owe a debt. What does that look like on the IRS side? Well, you're going to get a bunch of notices before the IRS tries to collect from you. The first one you're going to get is a CP-14 notice, right? This is the balance due. You have 60 days to respond before the IRS moves to the next stage. The next one is going to be a CP-501 and a CP-503 reminder. These are a reminder notice showing that accruing penalties and interest are happening and that you better respond. The next one is CP-504. This is a notice of intent to levy. This is a biggie. The IRS is letting you know you have not responded, you owe a tax debt, I may seize your tax refund, I may garnish your bank account, I may try to garnish part of your Social Security. This is an enforced action. In this notice too, a CP-504, if anybody's received this, is also your right to tax court. So now you can dispute that you owe it once you receive this notice. However, you don't have to get the dispute stage if you respond to these notices first. You can also dispute during these stages as well. All right, the letter 1058 is your final notice, and it triggers a collection due process hearing. You can have any kind of lien enforcement, bank levies, wage garnishment, federal tax liens. Another one is a notice for notice of a federal tax lien. That's an NFTL, which is filed in public records. It's a placeholder so that if you are trying to sell a property, no IRS has a lien against it. You're going to have to settle with them first. The biggest one, and this is if you owe seriously delinquent tax debt, and it's $64,000 or more, it's going to trigger a State Department certification, and you're going to get your passport revoked or denied. So big consequences for failing to file or pay. Okay, so these are the statute of limitations. The tax code has strict time limits on IRS authority and your rights as a taxpayer. These are statute of limitations, and knowing them is essential for filers and for practitioners. So under the assessment, you have 3 years from the later of the return or the due date and their actual file date to assess the tax. And this is a biggie, right? This 3 years, 3 years here for the assessment, but also 3 years here for the refund. So if you want a refund, you have to apply from 3 years the date is due, which means file your taxes from 3 years at the date of the due date in order for you to be eligible for that refund. If you don't file those taxes in that 3 years, kiss your refund goodbye. There's no way for you to get it unless there are extreme extenuating circumstances, and IRS is very rare to grant them, and it has to do with a medical disability, okay? And it's an extreme medical disability, that it's not just any medical disability, okay? The IRS can extend that assessment to 6 years. If you don't file or you are committing fraud, guess what? That assessment, there is no limit. There's no statute of limitations. IRS can assess whenever they want for eternity. Now, here's a big one for you guys to know, that OTAX step. If you have filed, which I hope you have, and that filing is from the 10 years of the date of assessment, IRS only has 10 years to collect on that tax step. So if you filed and you owe, IRS only has 10 years to collect on that tax step. Okay. All right. So I went over these. These are kind of a little bit more intricate into going to what those statute of limitations are. So here's a trap. Filing a late original return after a substitute for return, we talked about in the previous slides, it restarts the assessment statute expiration date and the collection statute expiration, but it does not start the RSED. So you don't gain any, which is the refund statute expiration date. The taxpayer doesn't gain any additional time to claim those withholding credits, those expenses, those deductions, after they're already expired under the 2-year rule. Okay. Let's move on. All right. So what kind of consequences are you facing? We went over penalties. We went over interest. What else? Well, guess what? There's criminal tax exposure that happens if the civil penalties aren't enough for you, right? Most tax problems stay in the civil area, however, penalties, interest, and collection action enforcement. But when the conduct crosses into willful tax evasion, then the Department of Justice gets involved. So let's look at the key criminal statutes. The first and the most serious crime is a felony carrying up to 5 years in federal prison and a $250,000 fine. This again is for willful violation. You must intentionally attempt to evade or defeat a tax. This is a deliberate concealment, hiding assets, or falsifying records. So there's for many years it's been around. There's people called tax protesters where they say, oh, I give up my social security number, I give up my passport, I'm moving to Mexico. I'm not a United States citizen anymore. I'm not going to pay taxes. No. Doesn't quite work that way. You still live in the United States. You're still earning an income. You're still subject to taxes. You can't just give up your social security number and think that you can avoid it. That would fall under a willful tax evasion, and you may be subject to criminal tax exposure at that time. Okay? Don't file a false return. You are signing penalty under perjury when you submit your IRS return. If you submit a false return, you can be subject to criminal. And then there's other ones, which we're hopefully no one is committing and we're not going to get into at this point. Okay. So, all right, let's say we're at the stage where haven't filed, we have penalties and interest, and now what do? So there are a couple of relief options at the penalty stage to remove those penalties. There is some debate on which one you can do first. It looks like the IRS is leaning towards first-time penalty abatement, which means it's your first time not filing, not paying. You can then request an administrative waiver for a first-time penalty abatement, an FTA. It's for first-time non-compliant taxpayers with a clean 3-year history. So you have to have filed. And this has to be like your first time. You simply call the IRS, ask for it. It's usually granted. Then there's reasonable cause. Let me minimize this so you can see. This shows that ordinary business care was exercised, that there was a death, illness, natural disaster, you relied on professional advice, and that was erroneous advice that was given as to a reasonable cause as to why you should not be subject to those penalties. Let's say you owe a big tax debt and you have penalties on that. So maybe not doing penalty waivers. Maybe we're looking into something else. And this is something that the LITC assists with. So we would assist with an installment agreement. We would assist with a currently non-collectible status. And this is an economic hardship status that says to the IRS, yes, I know, I can't pay. I'm in economic hardship right now. Please don't collect for me. This is offer and compromise. It says, yes, I know I owe this IRS debt. I can't pay it. Can we negotiate a smaller amount for me to pay? Perhaps you're subject to innocent spouse relief where your spouse had the debt, you were unaware of it, and you may be eligible for that liability, relief of that liability through this mechanism. The installment agreement, if you pay it in 6 months or less, allows you to reduce your interest or remove your interest in paying that off in 6 months, or it sets it up so that you can pay off that little liability over time. And again, this is something that the LITC at CLS can assist you with, and we can help assist you with the penalty relief as well. All right, so say you're getting ready to file your taxes because I have scared you enough that you must file your taxes by April 15th. So let's talk about what happens if you file and things don't match up. Well, you might be subject to audit, okay? So under this, the IRS selects returns for audit through a combination of computer scoring, called a DIF score, and document matching. It's certain patterns reliably attract scrutiny. So what are some of these red flags? Unreported 1099s. This happens a lot, where you were a gig worker and you didn't get your 1099, but it was reported to the IRS from the company. You didn't report it. And so the IRS receives copies from payers and runs automated matching. And all of a sudden, oh, you didn't include your 1099. You get hit with an audit. Cryptocurrency, that's another one that's happening a lot lately. So the IRS requires disclosure on the very first page of the 1040 regarding cryptocurrency. Large cash transactions, if you're depositing big amounts into a bank account, that could trigger an audit. And then foreign accounts, they look at pretty closely too. So what are some of the deductions? Say you are an independent contractor, gig worker, and you're taking those deductions, which we had talked about earlier. Business meals and travel are big red flags if you're exceeding industry norms. If you're making $33,000 and you're claiming $18,000 in business meals and travel, IRS is going to look pretty closely at that. If you're claiming 100% of a business use on a vehicle, it's almost never believed, they're going to red flag that as well. Large charitable donations relative to income are a common audit trigger as well. And Schedule C losses for more than 3 of the 5 consecutive years invoke the hobby loss rules under Section 183 of the IRS code. All right, so what about business red flags? What if you own your own business? Misclassifying employees as independent contractors rather than employees is a big major focus area. A cash-intensive business with unexplainably low reported income will attract an automated underreporter notice. And any related party track transactions priced fair below market value also will invite scrutiny. High income is itself a risk factor. That probably doesn't apply to a lot of us here. So we're not going to go into that, but it's on there so that you guys are aware. All right. So now that we've gone over all of that, what are the practical tips that taxpayers should take away after I've presented it and scared you thoroughly? Well, we've covered a lot of ground, so let's put it all together. So these are the 8 things you can start today to protect yourself. First, always file on time. If you can't finish, file an extension on April 5th. File an extension by April 15th. That's Form 4868 IRS form. It gives you till October 15th. But remember, that does not extend your time to pay. Number 2, keep organized records. Follow the 7-year rule as a conservative baseline and back everything up digitally. Number 3, reconcile your W-2s and 1099s before you file. And you can download your IRS transcript at irs.gov and make sure everything matches what you're reporting. Number 4, report all your income, every dollar, tips, side gigs, barter income, cancel debts, gambling winnings. If you don't get a 1099 or W-2, use your last pay stub, use your deposit amount from the IRS. Don't ignore IRS notices. If you get a notice, call us. That's what we're here to help. Most notices are not emergency, but some of them have deadlines, so pay attention. Make your estimated tax payments if you're a gig worker or self-employed, and engage a professional or VITA early, not after the problem has escalated. You can create an account at irs.gov and you can view your transcripts, balance, and payment history and notices there. And I think we're going to take a pause there. It's 12:35. Everyone, is that good, or do you want me to continue? I have other slides as well.
A couple more slides to go ahead and do that. And then,
okay.
And then Sarah will ask you any questions at the end that are in the Q&A.
Okay, great. All right. So if you're an attorney, here are some considerations for you to take. Since this is generally to general taxpayers, I'm going to kind of move quickly through this slide. All right. So this is your quick reference summary. What should you do? You should file every year, even if you can't pay in full. Again, request extensions, make estimated quarterly tax payments. This is something that not everybody knows, so I'm going to go into it just for a second. If you're a gig worker or an independent contractor, you have to pay your taxes quarterly. You don't pay April 15th every year. So every quarter you're going to have to um, file your taxes. I advise getting some kind of bookkeeping software so that you can pull up a profit and loss statement and import this easily into some kind of other free file software or whatever that you're using to report these quarterly tax payments. You can just pay online as well and not file a return every time. You should file the return, but at least make your payments quarterly. You have to respond to every notice. Keep your records for 7 years. Remember, report all income. Crypto gambling is a big one. If you're going to gamble, make sure you're using a player's card so that you can take those losses. If you get a CDP hearing notice, then respond within 30 days of that notice so that you have a right to dispute or you have a right to argue against it. You can contact TAS or LITC. I'm the tax professional, so if you have a problem, contact us. And go to irs.gov/account and open up an account with them. It's free to do so. You can see what you owe and when you have to, and what tax years you haven't filed for. You can communicate with the IRS that way. It's a great system. You just need a photo ID front and back and some kind of camera, either on your smartphone or on a computer, so that they can verify your identity, and then you can look at your IRS account securely online. Don't ignore IRS notices. They escalate quickly and it gets overwhelming quickly. So the sooner you respond to it, if you get a notice, call us. If you get a notice, call the IRS, whatever you're comfortable with. Don't assume that unreported income isn't going to be detected. If you worked and you received some kind of payment, it's most likely going to be reported to the IRS. File an extension, but it doesn't extend payment. File that extension just so you save yourself from filing that failure to file penalty. Don't sign a return if you haven't reviewed it carefully. And let's talk about that. Make sure you file early. Filing early helps you get your refund quicker because everybody hasn't filed yet, so you'll be quicker to get it processed. If you're due earned income tax credits or other kind of child tax credits, and you have a dispute with a prior partner, first to file usually gets the refund first. It also helps protect against identity theft. So the later that you file, the more likely that identity thieves could file for you and get your refund when you're entitled to it. Don't sign a return if you haven't reviewed it carefully. If you have an audit, contact us. And you don't want to miss your deadlines. Don't miss your tax court deadline. Don't miss your collection due process deadline. Don't commingle business and personal. If you file electronically, don't provide a wrong social security number or a wrong bank account. That's another thing that everybody gets to. Double check your numbers. Make sure your social security number is right. Make sure your bank account is right. Okay. These are references for you if you want to take a closer look at the tax law. And this is a legal disclaimer. I want to let you know that this presentation is for educational purposes only, and it doesn't constitute a legal tax or financial advice. It just represents general principles of federal tax law. Okay. And I will turn it over to Sarah.
All right. We do have one question in the Q&A box, Bree, and it is, can mortgage interest be claimed even though not filing list of deductions?
Can I see the Q&A? Let me see.
Yeah, you should be able to pop it open. Can you see it?
Let's see. Oops. Let me stop my share.
No problem.
Okay. Here we go. Can mortgage interest be claimed even though not filing listed deductions? No. So you either get you either take the standard deductions or you take an itemized. If you take an itemized, you can claim your mortgage. I hope that answers that question. Any other questions?
Okay, that might be the only one.
Okay.
Sorry, let me go to the end because it popped up at the beginning because I was not paying attention to what I was doing. In all honesty. So let me there we go. So we can still take Q&A until the end, but I'll go ahead and just cover the last few slides real quick, and then we can check for additional questions. This is just general how to reach us by telephone 602-258-3434. Monday through Friday, 9 a.m. to 2 p.m. That phone line is open. So please feel free. You can do the application via phone. It is also available online at azlawhelp.org or through our website, has a link as well on our homepage. In person, we are at the Peoria Resource Center on Tuesdays from 9 to noon. Native Health, we're there from Wednesdays from 9 to noon. And in Mesa Can on Fridays from 9 to noon. We are a nonprofit organization, so we do want to just encourage, if you're of the ability to, please take a look at ways to donate to our organization and to support the work we do, including these webinars. Every bit helps, and we are always in the need of community partners. So follow us on our social media to learn all about the webinars that Bree and all of our other wonderful staff do for us, once a month. So please take a look at that, and then I will pass it over. Bree, did you want to cover this information as well?
No, this is for attorneys. We're good.
Okay, perfect. Then I will stop the share and let's see if we have any other questions. It does not look like we do. So if that is it, Bree, did you have anything else to share, or are you done for the day?
I think that's it. Hopefully I scared you guys enough, not too much, but just enough to file those taxes, get your refund. So everyone have a good day, and thank you for attending this.
And actually, Robin has raised her hand. Robin, if you have a question, can you put it in the Q&A, because we are unable to unmute or take live questions, but you're welcome to put it in the Q&A and we can wait just a minute.
I got an email from Danae. Danae, I will share my PowerPoint if you have it.
Perfect. All right. Okay. And then, oh, Robin just wanted to say thank you. That was a very nice question. We'll take those questions. So wonderful. Thank you, Bree. I really appreciate you sharing all this information, especially this time of year, as I'm sure everyone else does as well. So you will get a little bit of time back in your afternoon before 1 p.m. Unless there's anything else, we can go ahead and end the webinar. Oh, look, we did get another question right at the buzzer. How should our clients and me personally in future years deal with charitable giving?
Well, you can always take whatever you donate. You can always deduct that, right, as a charitable donation. It's not bad to do that. You should do that. If you're giving, then report that on your income tax return. The only time that it becomes a question is when it's huge donations and you don't have record of it. So if you're donating cars and you're donating, a bunch of stuff, just keep record of it. Take pictures, get an itemized list, and get documents. If the nonprofit or whoever you're donating to will write you a document stating what you donated and what that amount is, that's your best defense. There's no problems with charitable donations. It's just that you subject yourself to audit if it's big and you don't have documentation for it. So when in doubt, always get documentation.
Wonderful. Thank you so much. And if there's any further questions, you can reach out to Bree if you have her contact information. If not, please email info@clsaz.org, and we are happy to share the slideshow or reach out to get confirmation on any information you heard here today. So thank you again, Bree. Really appreciate all your expertise in this, especially again at this time of year when everyone's thinking about it. So thank you all and have a wonderful afternoon.
Thanks, everyone. And if anyone wants this to be a CLE, I have it prepared. So just contact me and I'll put together a CLE for everyone so you can get attorney credit. All right.
Perfect. Thank
Bye,
you.
everyone.
Have a good afternoon.